Thanks for joining us here on the Market Day Report. I'm Marlon Bowling with you on a Monday as we get things rolling. We have all the futures trade off and running, and we're going to get a little expert help to help us analyze today's trade. Let's go to the phones and bring in Mr. Dewey Strickler of AgWatch Market Advisors, and he is based in Franklin, Kentucky. And Dewey, hope you had a good weekend out there.
Yeah, I had a pretty good weekend. It was warm and to some degree a little bit wet.
A little bit wet. Now, I assume as the planters are kind of getting ready to go in many parts of the country as the weather starts to warm up and we get closer and closer to the first day of spring here. I suppose a lot of corn is going to be going in the ground in parts of the southern plains where maybe they missed out on that rainfall. What are you hearing?
I think that we're going to start getting some of the planters begin rolling here in Texas. They usually are a little bit early in getting started on their planting. So, yeah, I think, the weather kind of clears up, looks like it is. We'll likely see a little bit of corn get planted down in there and also in other areas of the southeast.
Did want to take a look at some overnight developments on the outside markets here, Dewey. I saw where the crude oil market kind of fell apart. It looks like at last check it was over $1 lower. Right now, the April crude on West Texas, it's at $37.12 per barrel. That's down $1.38. The U.S. dollar index, though, is a little bit higher today. Now we're up 330 points at 96.500. How much are they going to play into the ag markets?
Well, I don't know they're going to play a great deal into the ag markets. I think what's going to play more in the ag markets, and that is especially in corn. I was a little surprised here last week. We had the funds liquidated some wheat, and also they liquidated 235 million bushels of their soybean position, which was quite a chunk there. But they did add 90 million to their corn. They're short a record little over 1.3 billion bushels. This might give the corn market a little bit more of a lift than what had expected here, say, from last week.
Well, the corn is up a couple of cents on the May right now at 367, and July, excuse me, up a couple of cents at 371.5. Now let's look at the soybean trade, and right now on the futures we have May now down 3 at 892 3/4, July down 2 1/4 at 899 1/4, September down a couple of cents. Why the divergence here, Dewey?
Well, you mean between the corn and the beans?
Yeah.
Okay, it's mostly just because of what we just kind of discussed here. We did see some liquidation here last week in the beans by the funds. It's taken a little bit of pressure off of that market, and I think the trade is a little bit concerned that we're looking at a record short position here in corn, especially going into the beginning stages of the planting season. So I think you're looking at some divergence like that.
And a lot of areas did miss out on the moisture in the High Plains region on the wheat. If we look at Chicago wheat, we have the May contract there down 3/4 at 475, July down a half. But in Kansas City, you have the May contract there 1 3/4 higher, and July up 1 1/2 at 494.5. Is that the reason why KC is gaining?
It may be a little bit there. I think you're seeing just a little bit of spread activity going on as far as the KC wheat is concerned.
Okay, and in Minneapolis, we'll pull that up on the May contract. We're currently trading 2 1/2 higher at 517 3/4. Remember, that crop has yet to go in the ground. On the cotton trade, well, here we have the May contract up 44. July is up 37 at 57.40 so far this morning, so a higher trend all around for the most part. We'll be back talking with Dewey Strickler about the livestock trade when we come back in 1 minute. Well, we're back with you on the Market Day Report. I'm Marlon Bowling with you. Our special guest on the phone right now, Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky. What a finish to the week we had in the cattle complex last week there, Dewey. They gained quite a bit of ground on the futures trade, even though they backed off into the close. And we had a cash cattle market that, for whatever reason, in Nebraska was up about $6 on a dress basis when it developed on Friday. What a deal that was, and a way to end up the week there. Were you surprised by that?
Well, maybe a little bit in a way, but then again, not. We had to cut out values. We're up for the week here. And also you got to keep in mind that we're beginning to go into the spring here. Packers are needing a little more cattle here because of the expectations for increased demand for the grilling season. So all in all, I guess I'm not too terribly surprised that we had a pretty good, decent week last week.
Let's take a look at our live cattle trade to see what's shaping up here in the early going this morning. Right now, the April is down 38 cents at 139.42, and it did have a high of 139.98. So there for a little bit, we were a little bit higher there right after the open, backed off now. The June contract down 15 at 128.40 after posting a high early today at 128.88. So just a bit of a reversal, but we've been on both sides of unchanged here so far.
Yeah, that's right. Technically, the cattle market looks pretty good here for the next maybe few days going into this week. We might see a little run up here at about 142, 142 and a half basis the April. Then I'm going to look for a setback to begin to develop.
So when we made those highs on Friday over 141 in the April live cattle, blowing out the overhead resistance at that time, did that cause a lot of people to go in there and start taking profits in the market when it got up that high? Because it was a bit of a disappointing close, even though it closed at new highs for a while.
Yeah, but the way I look at it, we closed mid-range. Now, if we closed in the lower end of the range, I've been a little more concerned.
Okay. What about the spread between April and June? What's going to happen there? Because it's over $11 right now.
I think you're going to see the spread begin to narrow.
So which one's going to give more, though, do you think? This June's going to come up to meet the cash, or what?
I think that you'll probably see that to some extent. I think that, the April's pretty well going to shoot its wad here in a little bit, so that will, bring a little bit of the spreads maybe closer together possibly.
All right. You talked about the beef cutout values from Friday. We can take a look at those. Boy, they really narrowed up that spread, that's for sure, on Friday. Choice cuts were down $1.19. The average price worked out to $224.05, and then you had selects gaining $1.27 at $215.12. So they did narrow it up by about almost $2.50, but it had been widening out for like a week straight, the way it seemed. On the feeder cattle trade this morning, we'll take a look at the futures there, and on the big board, we have the nearby March contract up to at 162.42. The April contract is 43 higher right now at 163.15. It did have a high of 163.70. So here too, we have backed off a little bit from our earlier high on the day. But goodness, we're 80 cents off of our low as well. So it must have been a fairly choppy open here on the feeders.
Yeah, it was. I think the feeders on the April might get a little bit above 166, but then I expect to see some selling, profit taking to occur.
The lean hog trade seemed to kind of bump its head against overhead resistance on Friday, and it closed back off of it a little bit. Right now, April lean hogs are down 78 at 71.05, May down 55 at 78.70, June down 36 at 82.72. Does that cause you concern, or is this a needed correction?
Well, I think we may be starting to see a little more than a needed correction. We did have the cutout up for the week in hogs. We are looking to see an increase in the summer supply. Head look for the hogs on the April, get a little bit above 72 mark. They almost got to 73 last week. I don't know if we're going to get back up to those levels. I'm going to start looking for this hog market to have a break back into about the 68, maybe 67 range.
All right, very good. Well, thank you, Dewey. I appreciate the comments today. Dewey Strickler with AgWatch Market Advisors in Franklin, Kentucky. So a weaker start on the hogs. Cattle have a split decision right now.
All right, thanks so much, Marlon.